In the quiet glass towers of Sydney and the historic lanes of Melbourne, a quiet transformation is unfolding. It lacks fanfare or public filings. Instead, it happens in the hushed, cold, climate-controlled corridors of family offices where the air is cool. The very air in these rooms feels different, charged with the static of millions of calculations per second. Decades ago, the measure for a great Australian investor was the size of their staff, the army of analysts who spent hours poring over balance sheets and global trade manifests. Today, that iconic image is rapidly dying. The bustling investment floors, once filled with the energy of human ambition and the sound of telephones, are being replaced by the rhythmic, steady hum of high-end server rooms. These silent machines are the new engines of wealth, processing more data in a heartbeat than an entire floor of human analysts could hope to digest in a year. We aren't talking about standard algorithms or public intelligence tools accessible to the average person. This is a different tier, the black box technology of the ultra-high net worth individual. This is not a tool. It is an unfair advantage. While the retail investor reacts to news that is already broken, scrambling when a headline hits their phone, these private AI-driven ecosystems operate in the realm of the predictive. They don't just see what is happening. They calculate what is likely to happen next based on patterns too subtle for any human mind to detect. This high-end automation has created a shift from reactive data management to proactive wealth generation, moving away from traditional brokerage firms and towards secluded, proprietary infrastructures. The Australian Securities Exchange, or the ASX, serves as a unique playground for these systems. Unlike larger global markets, the ASX is characterized by high concentration in specific sectors, primarily mining and banking. It is a market where volatility is a constant companion, driven by fluctuating commodity prices and the shifting economic ties of major trading partners. For the elite, this volatility is not a risk to be feared, but a series of micro-inefficiencies to be exploited. When giants like BHP or Rio Tinto fluctuate by a fraction of a percent, the AI identifies the lag in real time, executing trades in the blink of an eye. These algorithms are fine-tuned to understand the heartbeat of the Australian economy, monitoring everything from the iron ore output to the financial hubs of the eastern Australian coast. Imagine a single individual, perhaps sitting in a quiet office overlooking Sydney Harbour, managing billions of dollars in assets without a single employee in sight. The elite are no longer looking for employees, they are looking for higher computing power. By removing the human element, the emotions, fatigue, and cognitive biases, the elite have built systems that are as relentless as they are efficient. It is a total overhaul of the traditional wealth management model, where technology acts as both the strategist and the executor. Before we continue, subscribe to the channel and tell us in the comments where you are watching from. This journey into the shadows of high finance is only beginning. As we witness this widening gap, a central question begins to haunt the modern investor. If the elite are using tools that can predict market movements before the first headline hits the press, is the concept of a fair market simply a myth for the rest of us? The information asymmetry is growing deeper every day. While the standard retail investor operates on yesterday's news, the wealthy are navigating a landscape defined by algorithmic foresight. We are entering an era where wealth is no longer just about capital you possess, but about the speed of the data you control. The old guard of traditional brokerage firms is struggling to keep pace as their manual processes are outmatched by the velocity of generative intelligence. This shift is not just a technological upgrade, it is a rewriting of the rules of the game. The market is no longer a democratic space, it is a hierarchy of computing speed. To understand how the elite reached this level of digital mastery, one must look back at the scars of history. The 1987 financial crash was a pivotal catalyst for change across the Australian landscape. It taught wealthy individuals that human panic is the greatest threat to any long-term portfolio. This realization paved the way for the quantitative trading surge of the 2010s, where heavy mathematical models began to replace the gut feelings of seasoned traders. However, the current era of generative intelligence represents a quantum leap forward. It is no longer just about following rigid, pre-programmed rules. It is about machines that learn, adapt, and evolve alongside the market itself now. In the heart of this technological shift lie sophisticated neural networks specifically tuned to the unique rhythm of the Australian Securities Exchange. For a nation whose economy is so deeply tethered to the earth, these deep learning models have become experts in the complex global dance of commodities. They do not just look at stock prices in isolation, instead they digest vast, disparate data streams simultaneously. From the fluctuating industrial demand in Chinese manufacturing hubs to the subtle shifts in local Australian political policies. When a supply chain bottleneck forms in a remote Western Australian mine, or when a diplomatic shift threatens iron ore exports, these AI systems have already processed the implications. Giants like BHP and Rio Tinto are no longer just companies to be analyzed by their annual reports. They are nodes in a massive, living data set. The AI predicts their trajectory with an uncanny accuracy, identifying price reversals and entry points. This predictive power is fueled by sentiment analysis operating at an almost unimaginable scale. The elite are no longer waiting for the morning papers or the news cycle. Their private systems are perpetually scanning thousands of local news outlets, social media feeds, and niche industry forums to detect the earliest whispers of economic change or consumer fatigue. But the data intake goes much deeper than text. Advanced investors are now integrating real-time satellite imagery of Australian ports and mining pits into their decision-making engines. By counting the number of bulk carriers waiting off the coast of Port Hedland or measuring the shadows cast by iron ore stockpiles from space, the AI can calculate export volumes before the official figures are even whispered in the halls of Canberra. This is the new reality of economic health monitoring. Raw reality processed through a sophisticated silicon lens. Beyond the digital tickers of the stock market, this revolution has surged into the physical world of Australian real estate. The ultra-high net worth individual is redefining property management by removing the human property manager entirely. We are seeing the rise of automated residential and commercial ecosystems where billions of dollars in property are managed by invisible code. These systems utilize predictive maintenance algorithms that can identify a failing climate control system or a structural fatigue point months before a physical breakage occurs by identifying failures. By monitoring sensor data and historical wear patterns, the AI schedules repairs autonomously, ensuring the asset never depreciates due to neglect or human oversight. Even the human element of property, the tenant, is being optimized by these silent systems. The elite use automated vetting systems that transcend traditional credit checks and employment letters. These AI tools analyze non-traditional data points to predict tenant reliability, ensuring nearly 0% default rates across massive portfolios. When it comes to long-term capital growth, the yield optimization algorithms are even more impressive. While the average retail buyer looks at where people are living today, these systems look at where they will be forced to live tomorrow. By analyzing infrastructure permits, demographic shifts, and urban planning documents years before they hit the public domain, the AI identifies the next gentrifying suburb in Brisbane or Perth. It spots the hidden signals of growth, a new transit line, a school, rezoning, or a shift in corporate headquarters. The true power of these systems reveals itself in the brutal competition of time. In the world of high finance, a second is an eternity. This is the realm of high-frequency decision-making, where AI models adjust stock hedges and property valuations in the blink of an eye. Imagine the moment the Reserve Bank of Australia, the RBA, releases a subtle hint regarding interest rate hikes. While the human analyst is still reading the first sentence of the official press release, the AI has already parsed the linguistic sentiment, cross-referenced it with global inflation trends, and executed thousands of trades on the ASX. By the time the news reaches the retail investor, the price has already moved, the profit has been extracted, and the elite have moved on to the next opportunity. It is a game played in milliseconds, where speed is not just an advantage, it is the absolute barrier to entry. This barrier, however, is not built solely on the speed of light. The true fortress surrounding this technology is the sheer cost and complexity required to maintain it. Access to these black box ecosystems is not something one can simply subscribe to via a standard retail app. It requires a constellation of specialized engineers and data scientists whose salaries rival those of professional athletes. These technical experts are the new architects of wealth, tasked with building and maintaining proprietary data sets that are strictly unavailable to the general public. They bridge the gap between raw, chaotic information and actionable strategy. For the ultra-high net worth individual, the investment is no longer just in a diversified fund, but in the infrastructure that processes the world's movements. This creates a widening chasm of information asymmetry. When one group of people is operating with a high-definition view of the future while everyone else is looking at a blurred photograph of the past, the very concept of a level playing field begins to crumble. This raises a profound ethical question about the future of our society. Are we witnessing the birth of a permanent financial upper class, defined not just by what they own, but by what they know before anyone else? The gap between the AI-powered elite and the standard retail investor is becoming a canyon. In this new hierarchy, The traditional path of hard work and savings feels increasingly antiquated against the sheer force of computational dominance. Yet this reliance on automation is not without its own unique set of dangers. When multiple algorithms, all programmed to maximize profit, begin to interact in a closed loop, the risk of a flash crash becomes a haunting reality. We have seen instances where the market collapses in seconds, driven by a feedback loop of automated selling that no human could have predicted or stopped in time. This is precisely why the human element has not vanished entirely. It has merely evolved. The human override is now $1 million skill. These elite investors still employ a handful of master strategists who understand the psychology behind the machine. Their role is to step in when the algorithms lose their grip on reality, acting as the ultimate circuit breaker in a world of digital chaos. It is a delicate balance between the cold logic of the AI and the intuitive wisdom of the human mind. Looking forward into the next 5 years, the trajectory of Australian investment suggests a further stratification. While some optimists believe these tools will eventually be democratized, many experts predict the elite will simply move further into the shadows. We are already seeing the first whispers of quantum technologies, systems that can process infinite possibilities in ways that standard digital computers never could. The future of wealth in Australia is being written in lines of code that most will never see. It is no longer enough to follow the standard investment advice found in mainstream media. That advice is often the echo of a move that was already made weeks ago by a silent server in Sydney. To survive and thrive in this era, one must recognize that wealth is no longer about who has the most money, but who has the best data. The human touch is transforming from a daily necessity into a rare, high-end luxury. As we conclude this journey, ask yourself, in a world where the elite are guided by machines, what role will you play? The revolution is already here, and it is silent, efficient, and faster than you think. Data is the new gold, and the minds are already